Good morning. Welcome to Bazaar Morning Call. You're watching us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia, and joining me today are Nigel and Surbi. Well, there are mixed cues as we kickstart trade, but how are we feeling about today, guys?
Not bad. It's Tuesday, so we're 2 down. That's how I look at it.
Yeah. 3 more to go, right? And there's the Apple Store opening, guys,
That's
today.
true.
So, any of you looking to, go and buy that iPhone?
You guys are in the iPhone category. I stick to saving money and stick to my Androids.
But I'll be looking to go and visit the store. I mean, buying will be the second.
It looks like a great experience, right?
Like a great
Apple
experience.
Store. It's
I'll be looking forward to it.
And with the kind of grandeur that the store has, one wonders how costly or expensive the products are going to be.
Indeed.
So that's something to watch out for. But anyway, that's going to be a big talking point. There it is, the Apple store that opens for the public later today in BKC. And of course, we've been covering a lot of footage about the store, what it brings to the table. After 25 years of being in India, finally, Apple has a store in Mumbai and next up in Delhi as well. So the hype is real. But we'll talk more about that in greater detail. Let's get back to the markets now. In a sense, yesterday the market ended its 9-day gaining streak. So there is some resistance that the market is facing on the upside, especially after Infosys numbers and the weakness over there. So around this level of 17,850, 17,900 is a bit of a resistance or a ceiling for the market. As we kickstart trade today, there are some negative cues to start off. First up, of course, foreign investors have sold in the cash markets after 9-10 days of buying. It was not a big amount, but a sell figure. So the big question we're asking this morning is whether the rally, the rally that we saw in the last fortnight, has it paused? FI sold about 533 crores, while DIs bought 269 crores. Not bad in the global markets, actually. The US markets ended in the green. The Dow was up about 100 odd points. But lots of earnings coming through later today, so that could determine the trend for the next couple of days. There's Bank of America, Goldman Sachs, Johnson & Johnson. Alphabet, in fact, the stock was under a bit of pressure after news that perhaps Samsung could consider switching its default search engine to Bing. So that put a little bit of pressure on the stock. But for our own markets, as I was saying, there's a bit of a hurdle on the upside. This morning, the SGX Nifty is flat with a bit of a negative bias, so down about 35 odd points. There is this overhang of IT stocks that could continue because of the earnings. And of course, you have a lot of IT earnings coming through over the next 15 days as well. In terms of local cues, good earnings coming in from the likes of, say, a Just Dial and Angel One, smaller guys, but decent set of numbers coming through. And there's an IPO that will be listing on the exchanges today, Avalon Technologies, so we'll watch out for that as well. But, yesterday, I think the mood soured a bit after what Infosys delivered. So the large caps were under a bit of pressure. Let's see how it goes today. Looks like after ending that 9-day winning streak, there could be a little more pressure this morning.
Well, yesterday actually wasn't such a bad trading session. The Nifty was under pressure. You go home with the cut of around 100 and say, why are you saying it wasn't such a bad session? The mid-cap and the small-cap indices, they ended in the green and they virtually ended at the high point of the day. That's telling you there is appetite for stocks in the broader markets as well. So that's why I would say yesterday, the Nifty was dragged down by the tech majors, but otherwise, it wasn't such a bad trading session. The FI as well, they have been covering shorts. Yesterday, they put on the shorts after a long time, right? They added close to around 4,000 short contracts. And after 6 straight sessions of covering, there were some short positions that were had. Importantly, if the Nifty can hold on to the 17,550 odd mark, the bulls will feel they're still in with a chance. Just to give you a cricketing, relatable experience survey, if you look at it, you have 2 opening batsmen that come out there. That's the IT and the Nifty Bank. One is out of form. The tech stocks will struggle, but you're hoping at least they hold one end out and they don't get bowled out, right? The Nifty Bank needs to do the heavy lifting. So the Nifty Bank is going to be very, very important. So that's something that we'll have to track. And the Nifty IT index, you're hoping that it consolidates after the kind of correction that we have seen. Getting back to the FI data, well, yesterday they added 4,000 short contracts. They covered close to around 4,000 long contracts as well. So that's why the delta is close to around 8,000 contracts out there. And from the start of the series, the short positioning has come down from around 90%. It's come down closer to around 60% odd. And net short positions are down by 1 lakh contracts odd. Yesterday, well, there was buying of calls, more calls than puts were bought. The problem is they were writing more calls than puts as well. So in yesterday's trading session, you had the 17,700 call, 17,800 call. Both of them added more than 1.2 crore shares out there. So at higher levels, we're likely to see some bit of supply, which brings us straight to the levels then. as we mentioned yesterday, holding the 17,500, 17,550. That's very, very important. Yesterday, we came closer to around those levels, and then we bounced out them. And I say that those levels are important because the 50 and the 200 EMA come in that vicinity. On the upside, the 100 EMA will be a bit of a resistance, but the Nifty Bank is the key for the bulls. So the levels you're tracking out them is yesterday's low, closer around 41,800, and the 100 EMA, 41,700. That needs to do the heavy lifting. SGX Nifty suggests a bit of a pullback. The 100 EMA is a hurdle on the Nifty. Let's see whether or not this dip gets bought into at some point of time. Should be what else?
I guess you guys have wrapped up most of it. I'll just say that for me, there are three reasons why I'm just simply recapping everything.
Yeah.
Why I think the bulls have put up a fighting show yesterday and they have a fighting chance.
Yeah.
Number one, the sector rotation, Nigel, that you're talking about. Yesterday, we saw a recovery of almost 130 points from the lows, and that rotation started yesterday. Money is moving out of IT, and that's very, very clear. Banks got a fair chunk of it, not just the large cap banks. We saw that in the PSU space as well. We saw that in FMCG, that's an under-owned part of the market. So the fact that there was a recovery, and it tells you that the market's texture is still a buy on dips. We just need to see if there's going to be more evidence of that. So that's point number one for me. Earnings season is everything, and it really holds the key. So the IT boys have, gotten us off to a bit of a wobbly start. Let's just put up the ones that are coming out today. We don't have any index companies reporting, but you have ICICI Lombard, Schaeffler, Tata Coffee, Crystals, couple of interesting stocks that are coming out with numbers. So everything depends on earnings, and the market's going to watch out for every number with a hawk eye. We will, of course, take you through the major ones after the bell in just a bit from now as well. The second picture the second point is that the globe is a pretty decent place right now. We've got Chinese data out just a while back. Look at the GDP numbers from China, 4.5%. The estimates were for an increase of about 4%. US markets are firing away. We'll hear from the bigger US banks. I mean, JP Morgan and Wells Fargo were fine. We'll hear from the others today and beyond. So the world's holding up. The Empire State Manufacturing Survey, by the way, yesterday showed a sharp increase. It was a bit of a surprise because from a negative 10, that number, negative 24, or that number moved to a positive 10.8 in April. So the data is still strong, though you don't know. The housing starts data, which will come out tonight in the US, that is expected to show a continued slowdown. And I watched the US housing market very carefully, just because those of us who were around in 2008, housing just kind of really gets you rattled up. But in any case, I mean, there is more positive than negative. The dollar spiked up on the back of that. Yeah. Crude spiked up. So let's see. But in the short point, the global picture seems pretty stable to positive right now. And the third point, Sonia, you mentioned yesterday's FII selling. It's important to take note of that. Just went back and kind of collated the numbers so far. Overall, the final picture, not the provisional, the final picture is still positive. We're doing good in April. We've already surpassed the inflows of March. So far in April, numbers are close to 9,500. And of course, it's so much better off than how we started the year. So flows are positive. The world is holding up for now. And the market seems to be telling us that, hey, IT's got a bit of a problem. We're shifting money to other sectors. Let's keep taking this thing higher. That's the reading, but we need to see more evidence as the day progresses, of course.
Absolutely. And, in that context, I think there's a lot of big numbers coming out in the next couple of days. Yeah. On Thursday, there's HCL Tech. On Friday, there's Reliance. On Saturday, there's ICICI Bank. So, we'll get, and these are large companies that are sort of barometers of, their industries. Yeah. So we'll get a sense of which way things are headed. These are just early days yet. And of course, IT is under pressure, but the rest of the market seems to be doing just okay. Let's tell you what you'll get to see in the next 2.5 hours. It's an action-packed day, so let me just tell you what's lined up. In the first half hour, we'll get you updates from the market across the globe. Adrian Movat will be joining in to discuss the global trade setup. Later, our research team will be joining in to give you the list of top 10 stocks. A lot of stocks in focus this morning. We'll also get Amisha Vora of Prabhudas Leeladhar to give us a view that comes in at 8:30. All right, we also have some equity views coming in for you this morning. First up, Sanjay Mukim of JP Morgan, one of the best and brightest voices in the industry. He says Q4 earnings season is expected to be mixed with the net overall downgrades, even as banks continue to do well. He says Indian equity should move with the global tide in this setup, with the outlook for global rates, liquidity determining market direction. In India, he says they prefer ICICI Bank, SBI and Staples. Real estate and two-wheeler sector, they are underweight on IT and consumer discretionaries.
Let's get to some money market views then. On the rupee, Kunal Sudhani of Ashanan Bank says the dollar rose, boosted by higher US yields, which was supported by strong factory and housing data. Fed and ECB officials remain hawkish and markets are discounting a 25 basis points rate hike by the Fed in May. He adds that all eyes are on the Fed's beige book, which will provide clues about the current economic situation of the 12 Fed districts. For USD INR, Kunal says 81.80 acts as a support, while 82.25 is a resistance.
All right, and on the bonds, Ajay Magnolia of JM Financial says that gilt traders are a bit cautious and seem to be on the sidelines, avoiding larger bets, especially when the supply of paper has resumed, which may drive the yields more by the demand-supply equation than anything else. He says in the absence of any significant cues, inflation is moderating month on month and is moving in its comfort zone. He adds other variables like liquidity, crude and US yields are pretty stable and non-volatile, and any adverse movement in yields here are unlikely. He also says there's a low probability of further rate hikes, but the fear still remains. So he expects the 10-year benchmark bond yield to trade in a range of 7.22 to 7.27, and that's for the trading day. Okay, well, the global cues this morning are not too bad, actually. The Dow ended about 100 points higher. The China GDP data is good. So let's listen in to what the way forward could look like. There's opinion coming in from Allianz's Chief Economic Advisor, Mohammed El Erian, on the inflation trajectory, what the Fed moves may look like, and how all of this could impact the equity markets. Take a look.
Core inflation was not weaker than expected at 5.6%, and that's the one to look at. And second, flying under the radar screen are survey measures of inflation. You had the New York Fed last week showing that inflation expectations for this year have gone up a full 0.5 percentage point. You had the Wall Street Journal this morning surveying economists. That's up 0.4 percentage points. So what you're getting is recognition that inflation is going to be sticky at around 4 to 5%. And that's what's been reflected in the 2-year that has traded back up to 4.14 and higher expectations of a 25 basis points hike at the beginning of May. If you look at how inflation has migrated from a few goods, food and energy, up to the whole goods complex and now to the service complex, and we're starting to see it in wages, people should follow the Atlanta Fed wage tracker. That's up around 6%. So if you look at what has happened to the inflation dynamics, it's now embedded in the service sector and it's starting to impact wages. And that's what happens when the Fed is late. That's what has happened in past episode, is that inflation goes from things that are interest rate sensitive to things that are less interest rate sensitive. You need to go higher and for longer, and therefore you incur two risks that we've talked about. One is to the real economy, and the other one is to the financial system.
Higher for longer, and what that really will bring about. Let's carry this conversation forward. Adrian Moat, investor and a well-known India watcher, is joining us from I think, Hong Kong this morning. Adrian, thank you for joining in. Always a pleasure speaking with you. You know, we're living in very interesting times, and I want to get your view on first what IT earnings are telling us. It's only adding to the confusion, right? The market here was not prepared for US clients turning off the money tap so quickly. But that perhaps tells you what's happening in the US. But if that's an indication of the economy, that's definitely not reflecting in the stock market, right? At least the US market is up and away. India has been range bound. What do you make of things, all things put together?
Okay, so if we take a stock that's done very well in the US this year, Meta, the holding company for Facebook. So Meta's share price is rallying from very low valuations. You know, it was a single-digit multiple. And it rallied because they've been cutting costs. They're spending less money on the metaverse. And so it's very logical that that company with very high free cash flow and increasing free cash flow is rallying. But how are they rallying? They're rallying because they're laying off staff. They're rallying because they're cutting costs. And it's very important, you know, we tend to think that the stock market has to directly reflect the economy, but you need to be conscious of the composition of indices and, you know, these big mega stocks that drive the indices, what is driving them. So I think it's logical that the narrower NASDAQ 100 is outperforming the broader NASDAQ composite. It's logical that you're seeing the Indian IT services industry being the wrong side of corporate America cutting costs. So to me, the market is very logical, but you need to understand what's driving these big stocks in the market. And what you've got in the situation with the U.S. market is it's a narrow move. Big mega stocks that are cutting costs are moving higher. When you look at the broader, like the Russell indices, etc., that might be a better reflection of what's going on in the economy.
Okay. Adrian, hi, good morning, and always great speaking to you here on CNBC TV18. How are you feeling about India now? It's been a bit of a painful period, right? The market has been under pressure. It's frustrated investors. There's been no recovery coming through. But somehow we've weathered the storm so far. Do you reckon that the second half of the year could see a big up move? Because that's the narrative now, that perhaps the worst of the bad news is in the price, and now the market will take a turn for the better. Would you concur?
Okay, so the market is down modestly this year after being a significant outperformer for a number of years. There isn't anything particularly wrong with the economy. The currency's relatively stable. The issue, as we've discussed in the past, is what are the opportunities available out with India? And so in the larger markets in the United States, as I was discussing earlier, we've got a cost-cutting story. We've got a story with the large money center banks benefiting from some of the stress that we're seeing in the financial system as deposits move towards them, and they then get very, very strong net interest income, which is what came through in the results for JP Morgan. And then when we look at the emerging market space, today we had the GDP numbers out of China. Those were above expectation. I was particularly interested in strong retail sales numbers as evidence of consumption rebounding nicely as we leave this sort of very unpleasant zero COVID policy that dominated much of 2022. The tech sector in Korea and Taiwan have been performing well. That's probably more of a recovery trade after being the worst performing markets in 2022. So you've asked me a question about India, and so far I haven't really said very much about India, but it is partly a story of there are other opportunities. There's a bit more delta elsewhere, which is encouraging investors to move to those markets. I think when we're trying to look at what is the trend in the Indian market at the moment, and that's quite difficult to define, isn't it? There isn't a clear sector trend. Now, there might be now an underperformance of the IT service sector. Your best performing stock year to date is ITC, which tends to reflect a relatively, defensive bias in investors' thinking. HDFC's kind of done all right, but some of the other banks have gone down. And I think also, one would like to sort of on these shows say, right, well, this is what I think is going on. But at the moment, as I look at India and talk to other investors in India, we're not entirely sure what's going on, but we can see some trends in other markets, and perhaps that's why you're seeing the sort of relative underperformance.
So, Adrian, China, Korea, and Taiwan, they are ahead of us in the pecking order, right?
They are, and I think the other issue here is we tend to talk about this sort of idea of a recession and that everything is synchronized, everything goes badly at the same time. But you've had your manufacturing recession, you've had a deep inventory destocking going on in the tech hardware space. Apple, who you've been talking about earlier, Apple had their worst quarter in terms of MacBook sales, PC sales for 2 decades. All the recession is kind of there already. And to some extent, there are thoughts in the Korea and Taiwan that these very cheap markets are more of a recovery trade going into next year.
So, Adrian, to come back to your point, you made a very interesting observation that no one quite seems to know what's going on in India, right? Let me make it more difficult for you and ask you more on that. Any guesses what's happening? And let's leave aside IT. I think we've discussed that. There's a lot of money that the government has been spending on capital expenditure, and we keep hearing that narrative that that's where you need to be invested because there's a capex cycle coming back after a decade. Do you agree with that? If not this side of the market, does anything else look interesting to you right now?
So, your capex point is also reflected in the leadership, isn't it? So, You've got the cement companies doing well, L&T. So I think people would concur with that as a theme. And the infrastructure spend that has gone on in India is a meaningful improvement from when I started looking at the market. And it's effective, and that the market agrees with that. But it doesn't sort of feel like, well, you've got to go and buy these companies today because people don't know it's going on. I think they know it's going on.
Okay. Adrian, you know what, just one final word. I mean, since you're talking individual sectors and stocks, there was a note that CLSA put out this morning where they had a road trip across Singapore, Hong Kong, to speak to investors on what they like in India. And one of the spaces that they like is autos. They say that, autos are coming back, stock prices have fallen, demand is resilient. Is this a space you think could sort of outperform the Indian markets? Is it a space that you look at closely?
Well, these stocks are up year to date, right? So they are outperforming the market. So yes, I mean, I think the Indian consumer seems fine, reasonably robust. And yeah, it's working at the moment. I don't see any reason why it shouldn't continue to work. But these are the outperformers year to date. And that probably makes a fair amount of sense.
Right, final question from me, Adrian, before we let you go. What are you factoring in with regard to the Fed action? I'm looking at the Fed tracker, and most on the street, well, they are factoring in the 25 bips comes about, in the coming May policy meeting. But post that, do you expect more hikes? And are you factoring in a cut towards the end of 2023 or 2024?
So I would expect one more hike, and then we plateau at that level for the forecastable future. What would need to occur for the Fed to start to cut rates? You'd have to see a meaningful weakening in the labor market. Most recent labor market data was about 250,000 new jobs created. So I think there is a disinflationary trend going on. Mohammed Al-Arian was talking in an earlier piece that you had but inflation is still high, even there is deflation going on. So I think you hit a plateau, and we hold there at 5.25 for the balance of the year, unless the contraction in bank lending gets more severe, and you begin to see that being expressed in a rapid deterioration in the labor market. I suspect that's not going to happen. There's a fair amount of momentum in the US economy, and so we'll just have to learn to live with it. 5.25%. What you've got to remember about that, though, is if I'm getting 5.25% on overnight cash, finding interesting investment ideas in higher risk assets is going to require them to be offering me a higher return. And that's something we've all got to reflect on. And it means that P multiples that we've seen during the zero interest rate environment are not going to be seen again.
Got it. All right, Adrian, we'll leave it at that. Thanks a lot for joining in and speaking to CNBC-TV18. Appreciate your thoughts. Well, that's the word coming in from an emerging market expert. They say that there are better markets to invest into rather than India, and investors prefer other Asian markets. Let's slip into a quick break on that note. On the other side, plenty of stocks to talk about. Our entire research team will be with us in just a bit. Stay tuned. Welcome back to Bazaar Morning Call. So we are sitting here in the studio, but at BKC is where all the action really is. The Apple Mumbai store opens for buyers, for consumers today. That's the first Apple store that opens in India. It's in Mumbai. The next one, of course, opens in Delhi very soon. But look at that. I mean, that's some live footage coming in, and the lines are long. People all set to go inside, experience the store. It's a dynamic space where customers come together, explore all the Apple products, and eventually, of course, you pay the same amount that you would pay if you go anywhere else and buy an Apple iPhone. But I think it's the experience that customers want, and all the hype begins today.
Are either of you planning to join that line anytime soon today?
I'm going to visit for sure.
Yeah.
I've been an Apple user for the past 10 years, 10 years or so, so I'll definitely visit.
I'm definitely going to visit the store, and whenever there's, I think, the new iPhone coming up in September, the iPhone 15.
Oh, then the lines will be very long.
That's when all the major hype, because it's not too many months away, right?
Yeah.
It's just a couple of months away. So if you're looking to sort of change your phone, if you've had an Apple phone for like 3 years and you want to make that switch, you'd rather wait till September till the new product
Absolutely,
comes.
till the new product comes in. So there you go. Both Mumbai and Delhi as well, of course, have their very own original Apple store now. Well, with that, let's move on. Time to look at the here and now and look at, of course, all the stocks on our radar. And our research team is standing by with the CNBC-TV18 list of top stocks for the day. Guys, good morning. Numbers trickling in. Rima, let's start off with you first. Just Dial, how does it look?
Well, it's a decent quarter from Just Dial, a revenue growth of 5% on a quarter-on-quarter basis. On a year-on-year basis, the revenue growth is up 40%. The year-on-year number looks much higher because remember, the comparable quarter, the base quarter of last year was impacted due to COVID. But the revenue, the current quarter's revenues at 232 crore are finally getting towards the pre-COVID revenues. In Q4 of FY20, which was the first quarter hit by COVID, the revenues were 234 crores. So we're getting almost to the pre-COVID run rate. Margins look substantially higher on a year-on-year basis, but look at the quarter-on-quarter trajectory and you would see an improvement with margins of 14.4%. This is the highest in the last 2 years. The cash in the books is very healthy for the company at more than 4,000 crore rupees. The only negative in the number per se would be the paid campaign additions. Now, paid campaign additions stands at 16,340 crore, and this is slightly lower than the last 3-4 quarters run rate of 20 to 22,000. So in that sense, that's a bit of a disappointment, and we will try and get more clarity on that. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, let's hop across to Surbhi. She's tracking quite a few numbers that came post-market hours yesterday. Angel One, TV18 Broadcast, Network 18 as well. Surbhi?
Thanks for that. So Angel One reported very strong numbers. This is given the volatility in the capital markets. The revenue was up 10% at 826 crores. The EBITDA was up 20% at 371 crores. And this was largely due to lower employee expenses. The employee expenses were lower by 33% sequentially. The margins came in at 45% versus 41%. The PAT was up 17% at 276 crores. The average revenue per client, that was also up 3% at 427 rupees. Next on my radar is Network 18 and TV18. Network 18 on a consolidated basis, the revenue was down 8% at 1484 crores. The EBITDA was down 78%. Margins came in at 4% versus 16% same time last year, and it reported a net loss of 37 crores versus a profit of 62 crores. The company said that the weak ad environment and investments across businesses impacted overall profitability. Moving on to TV18, on a consolidated basis, the revenue was down 6%, the EBITDA was down 70%, and margins came in at 6% versus 17% same time last year. The profit was down 75%, came in at 35 crores versus 144 crores. The management said that TV viewership share increased for both news and entertainment network, but the profitability of the business was impacted due to investments in new initiatives like the digital, entertainment and the sports segment.
All right, Surbhi, thanks a lot for that. Well, let's go across to Vivek now. He's tracking a couple of more block deals this morning. Vivek, what do you have on your list?
Well, good morning. You know, the details of yesterday's block deal. So, Zee Entertainment, like you mentioned, Oppenheimer has sold almost 5.65% stake in the company. A clean out trade. Buyers, very interesting list of marquee names coming in there. Siganti India Mauritius, Morgan Stanley Asia, as well as Goldman Sachs are the buyers in yesterday's block deal. Keep an eye out for Poonawalla FinCorp as well. Now, Sanjay Chamria, has sold almost 1% stake in the company out of the total 1.3% stake that he held at the end of the December quarter. Mayank Poddar too has sold, but again, the list of names here, domestic mutual funds, Aditya Birla, Sun Life, as well as Plutus Wealth Management are the buyers in the block deal yesterday. And lastly, some selling pressure emerging in 361 WAM Limited, FIH Mauritius Limited, that is Fidelity, sold almost 49.9 lakh shares. That is 1.4% of the total 2% stake that they held in the company yesterday. The stock was under significant pressure in yesterday's trading session.
Okay, got that, Vivek. Thanks very much for running us through all of the interesting block deals. Let's get to Sonal. She's looking out for some more stocks that are in the news today. Sonal, morning.
Good morning, Surbhi. Let me start with Jubilant FoodWorks because there's an interesting update there where Coca-Cola has invested in an associate company, which is #loyalty, a 15% stake there for 105 crore rupees. Company stake, that is Jubilant FoodWorks stake in #, which will reduce to 29.75% versus 35% earlier after this transaction. BEML will also be in focus because equity shares of BEML Land Assets Limited will be listed, and listing is effective from tomorrow, that is 19th April. BEML Land Assets Limited holds about 550-acre land in Bengaluru and Mysore. It is according to reports, and BEML shareholders will receive shares in the ratio of 1:1. So watch out for that stock, could react ahead of the listing. Tata Chemicals, there's another price cut that has come in. After 6 months, this time around they have announced price cuts to the tune of 3 to 4% across India for light and dense soda ash, which is their major product. This is with effect from April 17, and Kotak Institutional Equity says that they see this as an incremental negative for soda ash prices because there are uncertainties around demand and supply as well, and this is something which could negatively impact the stock as well.
Okay, very helpful. Thanks a lot, Sonal, for all of those stocks. Here's a quick recap in case you missed out on any of them. Stocks with positive news flow, there's Just Dial, Angel One, Z Entertainment, Poonawalla FinCorp, Jubilant FoodWorks and BEML. While stocks with negative news flow, there's TV18 Broadcast, Network 18 Media, 361 WAM and Tata Chemicals. So keep an eye out on those stocks. But let's do one thing. Let's get a quick handle on what's happening in the world of commodities. Oil prices actually fell 2% overnight, and now Brent is just above $85 a barrel. We have Manisha Gupta joining in to give us all the action that took place there. Manisha, hi, good morning.
Morning, Sonia. Thank you for that. Well, yes, the New York session may not have been good, and we did see the crude oil prices decline 2% overnight as the strength in US dollar was weighing. And then the markets were also looking at the expectation that ECB and US Fed will continue to increase rates, and that might hurt demand. But what we are dealing with right now in the Asian market is a strong Chinese data. So the first quarter GDP numbers at 4.5% is better than the street expectation. The industrial growth also has seen accelerating numbers, and that is supporting the industrial commodities. So the crude oil prices is trading in the positive yet again. Remember, China will account for 40% of the 2023 demand growth. So every data that comes in from China is going to be watched out for. And not just crude oil prices, that's the case with the metals also. Most of the base metals, industrial metals, fell in the New York session yesterday. But take a look at nickel now, and we've seen a recovery from 5-month lows. Copper is trading at a 1-month lows. Zinc also trading in the positive right now. So clearly the Chinese data has led to a knee-jerk reaction in many of these commodities.
Okay, so it's showing up in commodities. Thanks, Manisha. Not quite showing up in equities. Chinese and the Hong Kong equity markets not really getting excited on that data. They are flat to negative. As is the SGX Nifty. It's down now just about 0.2%, the SGX. Let's take a quick break. On the other side, we'll have Amisha Vora, Prabhudas Leeladhar joining in, discuss a couple of interesting fundamental ideas, important stocks. Later, we also connect with the Jonathan Barat of Probus Securities. We'll talk about crude prices with so much of this macro data coming in from the US and China. What lies ahead for crude?
Welcome back to Bazaar Morning Call. Hope you're having a good morning. Well, for starters, we'd like to start off a little bit on the back foot, maybe a 30-point downtick. But yesterday, we saw a good recovery from the low point of the day, 130 points higher from the low point of the day. So that was pretty good going as well. Amisha Vora, Chairman and Managing Director at Prabhudas Leeladhar, joins us on the show. Hi, Amisha. Good morning. Good to speak to you. Well, Amisha, let's focus on the sector that's disappointed in the last few days. That's the tech space. Now, the debate is out there that some of these stocks have seen a sharp correction, but valuation-wise, they could be providing an entry opportunity for a longer-term investor. What's your view on the big tech companies?
So one is that, markets right now in a very unpardoning mode. That's how the reactions to any disappointment will be very sharp, and that's what the beginning we saw, and I think this trend will continue. But within the sector, and particularly the disappointment which Infosys saw, I think one of the reasons was in the December quarter, highest addition was done in this stock. So that means it is what has come is a complete surprise to market in one of the widely held, widely covered stock, and commentary is no great. So overall, I think that this little coldness to the IT stocks in the portfolio weight will continue for a while longer. But coming back to the fact that are they at a price where a lot is discounted? I would say yes. So the time consolidation will continue in the stocks, and the real price upside will be little away. Downside could be limited is the only thing that we probably know at this juncture.
All right, so you're saying if the downside is limited and, perhaps the worst is in the price, Amisha, is this a good time to be buying IT stocks? I think that's what, my colleague Nigel was also asking you. Because, with now the kitchen sink thrown at the IT sector, one seems to believe that what else can go wrong, right? Your thoughts? Is it a good time to be buying?
Right. Well, you're right. But the fact is in December quarter, everybody went overboard on Infosys in particular. And IT was also gradually becoming from huge underweight to neutral. So having that act being done, even if the price is good, it's going to take time before you increase your weight is what I'm trying to say.
Okay, that's the thought on the IT sector. Amisha, hi, good morning. Yesterday, we saw some evidence of it. Money was quickly trying to move away from IT, and I think banks were the big beneficiaries, right? Even tier 2 banks, a lot of PSU bank stocks were up 5, 6, 7% yesterday. Now, while that's a tactical move, purely from a more fundamental standpoint, an investor standpoint, would you allocate incremental money to financials? And if yes, then what kind of stocks? I mean, we've seen numbers from HDFC Bank, for instance. So do you go there to the tier 1? Do you look at tier 2?
So on a slightly macro basis, if you see, last 1 year and particularly some of the last few months also, we've been continuously seeing FIs selling. And with that, a lot of pressure used to come on banks. Plus the global banking crisis also led little more pressure on banking. So while our credit growth, NIM and asset quality continues to be robust and good, banking sector was at a receiving end. So basis that switch also, I feel that it is more a domestic sector as compared to IT, which is a global sector. And the overweight stance in banking particularly will continue, and so the stocks will do well. Now, coming to HDFC Bank and its numbers, it is trying to prepare itself for the very large merger. So we continue to see how they build a little more cash, how that continues to have an impact on their NIM. And as compared to most of the other private sector large banks who saw their NIM expansion by 25-30 bips this year, HDFC Bank saw just about 10-12 basis points. But going forward, as gradually we leave the merger uncertainties and preparations behind, which will still take time, I guess 24 will more or less go into that. From 25 perspective, we still feel HDFC Bank on a merge basis has almost 15 to 18% still on the table for investor. In the short term, we still have, or rather the medium term, we still have ICICI Bank as our top pick.
All right. Amisha, what about Z? I don't know whether you're tracking this one, but Z, yesterday you had a large trade. Some would believe maybe it's the last, big trade before we get through to that merger. And the hope is that it actually takes place. It gets the green signal from all the regulators. What's your view on the stock? Valuation-wise, well, it's attractive, but it's always been attractive. There are risks on the table as well. How do you approach the stock in this 200, 210 odd range?
So as what you very rightly said, that the valuation has been attractive, probably at 250 also before the whole fiasco on, IndusInd Bank and other things happened. I would still say that at around 200 levels, a lot is in the price. And it is a very large franchise. And post the merger, it will become a dominant franchise. So the pain might continue in the very immediate short term in terms of price. But if one takes a little medium term view, I think this is a very good level for the stock.
All right. Amisha, I do want to, I want your views on a whole host of other sectors like autos, etc. But I'll just come to that in a bit. The other news flow that we're discussing is on crude. Crude prices have fallen about 2% as a stronger dollar and the likelihood of more rate hikes by the Fed has offset the optimism over higher demand. Jonathan Barrett, the CIO at Probus Securities, joins us now to talk about that. Jonathan, demand is coming back, which is, of course, a good thing. We just saw the China GDP data, which was strong at about 4.5%, and crude is now back at $85 a barrel. Your thoughts on which way things could head over the next month or two?
Yeah, sure, no problems. Actually, very encouraging data from China, there's no doubt about it. Particularly the retail sales was up around about 10% year on year. But I think there are generally three things that we've got to focus on. The first thing, obviously, is the Chinese data, how the demand sets in for there. The second thing is whether or not the US will flow into a recession as tipped by the Fed, or a small recession. And thirdly, how the Ukraine coalition is going to react to Russia's increase in oil exports and revenue. I mean, they've just come up to levels prior to the Ukraine invasion, about 8.1 million barrels a day. So I think there are the three focuses that I'm looking at the moment to see if we can get that direction for the price of crude.
Okay, Jonathan, hi, good morning. So how is the market now balanced after this surprise production cut that OPEC Plus announced? Is it getting a little tight on the supply side? Because the China data suggests that at least demand from that region, that part of the world, will probably remain strong.
Well, I think it is quite interesting because after we had that announcement by OPEC, and we saw the price move up, it's just flatlined basically. So I think the market's now trying to take lead from the general economics. In my mind, it needs to come back a little bit. If you look at quarter 2, quarter 3 and 4 forecasts, it is for a pickup in demand, and that's the forecast that most of us have had. And as a result of that, oil prices should be trading up around that 90-95. As to whether it'll get to that level, I think it's all about those topics that I've mentioned, in particularly the potential recession. We do know the Fed is continuing to raise rates. They might have reached terminal very close to the next 2 or 3 rates. But how that'll affect how deep a recession will be will, in my mind, determine where crude oil prices would go. I would like to see crude softer at the moment. From a technical perspective, I'd like to fill in its gap, 85, maybe back down to 82, and then stabilise there for some time. But just to stay in this little area at the moment is quite nerve-wracking.
All right. Hi, Jonathan. We got the upside, I think $90 to $95 odd is what you just mentioned. But, we here in India, we'd like to know the downside, actually.
Yep.
Do you see crude breaking that $80 per barrel mark, maybe trend a little bit lower?
Look, I think so. I think, look, it really will depend on the demand destruction that we potentially seen, as we have seen before. It's that ability for the market to say, well, look, we're going into a recession, interest rates are too high, what are you going to do about it? And if that is the case, and that's the talk around town, then prices will break through that US 80. Remember the speed at which it did collapse, and the speed at which the momentum sort of picked up to the downside. Crude has had a natural ability to stay in a tight range. I think it is that, but I think the telling points will be the height of these interest rates and how that will affect demand, retail consumption, travelling, all those sorts of things. So I think quite important, and also not to mention the weather, because that's highly critical as well. But I would like to see a little bit of a correction here before prices start to trend higher, but I don't see too much on the top side unless we get an imponderable occurring.
So you're saying that in Q3 and Q4, oil prices could go to $90 a barrel, but in the near term, very near term, you see it stabilize around this mark itself, correct?
Yeah, in the near term, I actually see it trading back to that 82. It's a funny thing when you look at the technicals. Normally, you've got a little bit of a gap to fill. Most technical traders like to see that. When I see this more talk of that recession, more data, then I think we will come back a little bit. But as we've mentioned, as you've mentioned, China is the largest consumer. And if that economy starts to go gangbusters, then I think the demand dynamics that we revealed at the beginning of the year will start to play. I think both are pulling and pulling each other away. And that's why we've got that market in this tight range. I would like to see it lower before going higher.
So would we, Jonathan. I can tell you that. We consumers in India. Thank you very much. Always a pleasure talking to you. Have a great day. And we look forward to our next conversation.
Thank you very much. Bye-bye.
Bye-bye. We'll take a break on that note. On the other side, we talk technicals. Can the bulls continue the rebound that we saw yesterday? Mitesh Thakkar and Sudarshan Sukhani joining in. Welcome back. So the SGX Nifty has been kind of, a little subdued just below the flat line. The question is, can the bulls wrestle back control having digested that IT blow? They were trying to do that yesterday in the recovery move. Today is a brand new day. We have Anuj joining in with his thoughts. Anuj, morning. What do you make of the market?
Morning, Surbhi, Nigel, Sonia. Well, yesterday was a reminder that earnings do matter, right? And yesterday's move, if you see Nifty, Infosys and HDFC Twins stocks reacting on earnings dragged the Nifty by 155 points. X of these stocks, the Nifty would have been up 33 points. And if you look at Nifty, it's back in that channel, upper end of that channel that we keep referring to. So in some senses, it's important because it's testing that and maybe is ready to, who knows, rally again. The Bank Nifty defended the first base of 41,800, which is important, and in near term remains the leader. Just to explain this FII number, yesterday Infosys had delivery number of 3.1 crore shares, and that makes it 4,000 crores of delivery selling. Now, just to put things in perspective, Infosys has 36% FII holding, which is highest across IT pack, and 18% mutual fund holding, which is also highest among IT pack. So if you were to segregate this 4,000 crores, you'll roughly arrive at 2,600, 2,700 crores of FII selling in Infosys alone yesterday, which explains the FII sell number. Again, net of that, FIIs would have actually bought. If you look at the Nifty, it sort of violated the first support, but held the second support. Yesterday's low is very important because A, it's event-driven low, and B, it's 200-day simple moving average. So in that sense, it's very important, as is yesterday's high, which is also the open high. So 17,550 to 17,570 now, sacrosanct zone for the Nifty. In terms of Bank Nifty, again, as I said, it bounced from 41,800, which tells you the inherent strength despite HDFC Bank's weakness. Now, today I'll watch out for HDFC Bank because last quarter, it corrected on the results day, but after that, took out the high and never looked back. Can we have something like that again? That's something to watch out for. Kotak is showing some strength. ICICI Bank, SBI showing strength. ICICI comes out with numbers on Saturday. In the near term, Bank Nifty, while overstretched, still remains the leader for the market.
Okay, thanks a lot for that. So the Bank Nifty is a leader for the market and technology on the back foot. I guess it's a tug of war between tech and banks for a while now. Thanks, Anuj. Mitesh Thakkar and Sudarshan Sukhani are joining in to give us their view. Sudarshan, I wanted your thoughts because, the market seems fine if it was not for IT. But, of course, IT has a large weightage. So you think it's going to drag the markets lower in the next couple of days? And what's the call on the index now?
Yeah, good morning, Sonia. I would feel that 17,600, which was our support zone, was held rather nicely yesterday. See, once a market goes into an uptrend, Sonia, it's so easy to talk about the markets. The market is in an uptrend, buy all dips. So that's it. The difficult part arises when the markets become sideways and choppy. Fortunately, we are not in that position anymore. This is an uptrending bull market, buy every dip. Now, the dips definition will be different for traders. For each trader, it will be a different level, different style of buying, but be on the long side.
Okay, so stay long. That is Sudarshan's call. Mitesh, good morning. Would you concur with that view?
Good morning. We've been kind of advocating managing or being on the long side. But on the index, I have a slightly different take. My belief is that looking at the short-term charts, there is a good chance that we've kind of come out of an up move and we might consolidate before picking up steam on the upside again. Broadly, it's a market which could range between 17,820 to about 17,550, 560. I think Anuj mentioned very similar levels on the downside. The 200 average is there. There's a retracement level of this entire rally and a pivot. So I think idea is to buy on declines. Closer to about 17,600, 17,590 becomes your buying zone. Keep a stop below 17,540 here, and on the upside around 17,800, 820 or closer to that levels, I would be inclined to take profits and exit long positions, because I believe this consolidation could last for a few days.
All right, playing for a bit of consolidation. Yesterday's low as well was closer to around that 17,550, 50 and 200 DMA as well, around those levels. Mitesh, let's talk about a couple of stocks then. What do you have for us today in terms of trading calls?
Morning, Nigel. I have more of buy calls today. AB Capital was a recommendation earlier as well. Buy this one with a stop below 160 for a first target of 175. Asian Paints is now giving some signs of reversal after base building, but a breakout will happen once it starts getting past yesterday's highs. So buy about 28.47, 48 levels. Keep a stop at 28.20 and look for targets of 29.20 on the upside. Bank of Baroda is a buy with a stop at 172 for targets of 185. And one sell call on Sun TV with a stop at 428. Sell here for targets of around 410.
Okay. Sudarshan, how about you? What are your stocks that you're looking at today? And also wanted your thoughts on ITC, considering that stock has really been, the star show of 2023 so far, record highs. More upsides there, you think?
Well, I must confess I missed ITC completely, because, for years it was doing nothing. So I wish I could say yes, I caught it. And therefore, I cannot even say whether there's more upside. Generally, when a good quality stock starts making lifetime new highs, there is significantly more upside. That's a general statement, and ITC would probably qualify there. Now, for the stocks, GAIL is a buying opportunity. It had a small correction, a renewal of uptrend, buy with a stop under 105. My only intraday short is Laurus Labs, short with a stop above 315. I love to find good quality stocks that are going through dips, because in a bull market, that's the whole idea. You buy them on those dips. Voltas is one such stock, buy with a stop under 811. And another is Bharat Forge, moving sideways. I would expect a breakout on the upside, buy with a stop under 740.
Okay, all right. Folks, thanks a lot for that. Let's take a quick break. On the other side of the break, the pre-opening rates are going to be kicking in. So we'll have that to, assess. And then Manoj Muralidharan of Religare Broking will also be with us to discuss some F&O strategies and lots more stock talk coming up.